Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Tuesday, November 21st, 2017, and this is the Daily Report for Gold and Silver. After yesterday's dynamic downside move, we did get a modest recovery today, with gold finishing up about $4.50 to close at $12.7980. Silver also trading higher, still below $17 per ounce, but up 9 cents at $16.94, and that's with a fractionally lower dollar, down about 0.1% at 93.89. Traders, we are witnessing a modest recovery in both gold and silver today, with silver trading up about 0.5% and gold trading up about 0.3%, currently fixed at $12.7980. That puts it up about $4.50. Now, the one thing that we can say when we take a look at our daily candle is that the relationship between the open and close is quite small, and the trading range itself between high and low is quite small. But that is to be expected as we get closer and closer to the Thanksgiving holiday. Nonetheless, when we look at the composite of gold itself today, we can see that the net gain was composed of 2 parts buying to 1 part weak dollar. The dollar is currently trading off today, but it's only off about 0.1%. It is currently fixed at 93.91. The main thing that we are seeing today is a little bit of buying coming into the market, and following yesterday's tremendous downside move, that is to be expected. Because as I said in our opening letter and all throughout the broadcast yesterday, my sense is that what we witnessed yesterday in terms of this dynamic sell-off in the marketplace itself was really not based on anything fundamental, nor was it based on any technical or economic information. It was based upon a large order moving the market to an extreme. Therefore, we see it coming back into alignment right now. But more importantly, we see that even with any kind of a damage that has occurred recently, the price point over this last 2 months has maintained itself above the longer-term 200-day moving average. In fact, it has maintained itself above the 200-day moving average since it broke above that after reaching these lows at around 1,200, and that, of course, was back in July of this year. And traders, I am still going under the assumption or the belief that a bullish model is in play, even with the fact that we have seen a dramatic sell-off that began in September after reaching the yearly high of about 1360, having a small price ascent, and then this decline. I do believe that that has formed a double bottom. When we take a look at recent price activity, we can absolutely see that we have had a series of higher lows, not necessarily a series of higher highs that have been sustained. On the bearish side of the fence is the fact that we have seen on 2 occasions. This first occasion was the time in which gold traded to about 1309 and came down, and then most recently had a tremendous upside spike. That, of course, occurring on Friday of last week. And then, of course, yesterday's fiasco in which we gave up all of that gain and actually closed below the low of Friday's open. Today, when we look at that, it's almost a mini shooting star. We've got this long tail. And what that tells me is we have absolute resistance still in the market on a technical basis at about 1282, 1283. We can define our support level quite easily at about 1264 to 1265. That's based on this double bottom. And then, of course, we have the fact that we have maintained our price point above our 200-day moving average. Therefore, I am looking for muted action as we go into the extended holiday weekend. And most importantly, the release of tomorrow's minutes from last month's FOMC meeting will be critical in that traders and market participants will be attempting to glean any kind of information, any hints that they can get, insights that they can get as to the 2018 monetary policy going forward from here. Of course, we did this week get the resignation of Janet Yellen, but that was already written in the cards, so to speak, when Powell was nominated by Trump just recently. So tomorrow's minute release will be important, but realize, traders, that will be released after gold has stopped trading in the futures market. We will then get the holiday coming in for traders to kind of digest it, and then we'll see some sort of a reaction, if a reaction is warranted, immediately following the conclusion of the holiday, probably Monday of next week. Traders, therefore, it is my recommendation that we maintain a neutral stance going into the Thanksgiving holiday and look to see how this market reacts. I still believe that if we see the market effectively close above our current minor resistance, which sits at, call it 1283, and then we get follow-through buying. In other words, not a one-day wonder in which we see the market sell off immediately following that, but an extended move above that. I do think that we'll take a stab at 1300. I don't think that's out of the cards. I think that we won't have any kind of major resistance at all till about 1310, and if we can get through that, I do believe that we could make a stab at 1360, depending on the fundamental factors that are in the market. If they are muted, we can expect this market to trade quietly throughout November, and then as we go into December, as we talked about, there is a seasonal tendency in gold in which it tends to bottom somewhere between now and the beginning of next year, and then we get a dynamic rally. The question is, when will this market bottom? I happen to think it might have already bottomed, but when it will take off and move back into rally mode, well, that is the $64,000 question. So, for the meantime, we will remain flat as we go into the holiday weekend. There will be a report tomorrow, of course, and then we will rejoin you again on Monday. Traders, there's no doubt, I believe that yesterday's move was absolutely exaggerated, and I believe that what we're witnessing today, this modest recovery, is more of what we should be seeing as we go into a holiday weekend, an extended holiday weekend, and that is light volume and muted range. I would expect that to happen tomorrow, but traders realize that following tomorrow's trading conclusion, they will release the FOMC minutes from last month, and that could be very interesting in terms of what it does with future gold pricing. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.